Okay, in this video we discuss about cash budget. So cash budget is one of the budget under financial budget. So this cash budget show the cash that will be needed to finance all the budget. So in the business, okay, cash is very important in operations of the activities. So beside fixed asset or non-current asset, okay, you need the cash. If you lack of cash, you cannot operate the activities smoothly. So this is the purpose of the cash budget. Number one, to ensure the cash is available when needed. Number two, reveals expected cash shortage. So if there is shortage of cash, so the company should take or make a loan. Okay, should make a loan. Okay, and then number three shows if there will be any cash surplus. It's not only to identify the cash shortage, sometimes it's also to identify whether there is any cash surplus. So if there is a lot of cash surplus, the company should invest in order to generate income. Okay, in order to generate income. Okay, and number four, the purpose of cash budget also is enable the decision to be taken on capital expenditure. Okay, to plan for the capital expenditure of the business. Okay, there is examples of cash receipts and cash payments. So cash receipts, that means cash inflow into the business, and cash payments, cash outflow from the business. So what is the examples of cash receipts? Example is cash sales. So when you have sales, then you collect the money. So after cash sales, automatically you will get the money. So cash receipts. And then for credit sales, okay, the credit sales when you receive the cash from debtors, when the debtors pay to the company. Okay, not at the time the sales, but at the time you receive the money from debtors. And then sales of fixed assets. So you have fixed asset, you dispose the fixed asset, you get the money, cash receipts. And then issues of new shares. Okay, receipts of interest or dividends. Any loan received at the time you receive the loan, or any other cash receipts that will be under cash inflows. So example of cash payments is cash purchase. When you purchase the store or the stock, the material, you pay by cash, so cash outflow. And then if you have credit purchase, not at the time of purchase, but at the time you pay to your creditors, okay, that will be cash payments, cash outflow. Purchase of fixed assets, okay, wages paid, salaries paid, overhead paid, all expenses that you pay, and then also the bonus payment to your employee. Okay, payments of dividends and tax. Okay, loan repayment at the time you pay your installment, or any other cash payment. So these are the examples of cash payments. So now we refer to the format of cash budget. So you have to identify the period of the cash budget. So in this example, the first quarter, that means from January until March. So we have 3 months here, January, February, March. So we list down all the cash receipts. So what is your cash receipts for every month? You have to list down how much is it. Okay, the cash receipt, okay, cash sales or collection from debtors, dividend received, debenture received, investment received, other cash received, you have to total up for the 3 months, and then you list down the payments, okay, cash payments, okay, purchases that you pay, cash purchase, okay, at the time you pay to your creditors, okay, wages paid, purchase of assets, hire purchase that you pay, you total up. So these are all the example. Now you total receipts minus total payments, you get either surplus or deficit. So if positive, that means receipt more than payment, so this is surplus. If your receipts is less than payment, deficit, so you will get in negative. Okay, and then you add with the balance brought down. So the beginning period of January. That means 1st of January, how much that you have the cash balance brought down. So the surplus or deficit plus the balance brought down, you will get cash carried down at the end of January. So this balance carried down of January will be balance brought down for February. And then same goes to February. You plus the surplus or deficit, you get balance carried down. So this balance carried down in February will be opening balance or balance brought down in March. Okay, but sometimes you can put the balance brought down, okay, at the beginning of the statements, cash budget. Okay, so if you put balance brought down at the top, you plus with the receipts, then you minus the payments, you straight away get the balance carried down. Okay, so this is an example of the cash budget. So now we refer to the illustrations of cash budget. Okay, so we refer to this question. Everton Sdn Bhd manufactures a special rubber toy called Luna. So the company sells Luna at 10 ringgit each. So this is the selling price per unit of the product. Okay, and then the following information is available for you to prepare the cash budget for the second quarter of 2020. Okay, so information given in units raw material purchase in units from January until June, sales in units from January until June. So this is overhead cost, production overhead cost in RM. Okay, wages cost in RM. Okay, based on additional information, we refer here. The raw material cost is 5 ringgit per unit. So that means the units here you have to time with the price per units of material, you get the cost of purchase of the material. So all the purchases of material are on credit. Okay, so no cash purchase. So this raw material you have to pay the payment made 2 months after purchase. So this is cash outflow. Okay, so outflow here. Okay, so when you purchase in January, you pay 2 months after. That means you pay in March. If you purchase in February, okay, purchase in February will pay in April. Okay, so that one will be statement number 2. Okay, we refer to statement number 3. Normally, 40% of sales are collected in the month of sales, while the remainders are collected in the month after sales. So now we refer to sales. So this is sales in unit. To get sales in RM, so time with the selling price here, 10 ringgit each. So 6 times 10 per unit. So the sales in January will be 60,000. Okay, now this is cash inflow. When you sales, you will get the cash inflow. So the inflow here when you collect the money. Okay, when you collect the money, 40% of the sales in the month of sales, while the remainder means is the other 60% you will collect 1 month after sales. A cash discount of 10% is given to the customer if the payment made in the month of sales. So that means that 40% that you collect in the month of sales will give discount. That means discount allowed 10%. So you only receive only 90% of the sales collection in the same month. Okay, so that one will be cash inflow. Okay, number 4, advertising expenses and admin expenses, 5% and 10% respectively of the month's sales and paid in the month of sales. So that means here incurred in the same month. If the expenses in February will be paid in February, in March will be in March. So this is cash outflow expenses. Number 5, production overheads include monthly depreciation of machinery amounting to 2,000. So production overhead is expenses, is the cost, but there are 2,000 depreciation. Depreciation, even though it is expenses, but no cash outflow. So that means we have to minus the 2,000 from production overhead because no cash outflow for depreciation. When the production overhead is paid, so it's paid a month delay. So that means January production overhead will be paid in February. Okay, number 6, so this is cash outflow. Number 6 is wages are paid in the month incurred. So wages paid, that means expenses paid is also out. outflow. This one is no problem because you pay in the same month. Okay, number 7, sales tax 5% on sales of a month to be paid in the following month. So sales tax, so outflow. So based on the sales, 5% when you pay the next month, the following month. Okay. Number 8, other payments include 500 of property tax payable. So also outflow. There are 2 property tax, and also in this one is in May. So another one in June is 500 donation. Both are cash outflow. Number 9, dividend received. So received, I mean you receive, so cash inflow. Okay, on in June 8,000. Okay, number 10, a new machine will be purchased in March 20, costing 30,000. So the cost of the machine is 30,000. So when the machine is paid, the payment by installment, okay, for equal amount for 3 months. So 1 month is 30 divided by 3 is 10,000 when the payment is from April until June. So this is cash outflow. So this is opening balance in April 2020, 56 to 100. So you are required to prepare monthly cash budget for the second quarter. So second quarter means April, May, June. Okay, so now we refer to the answer. Okay, so the second quarter, April, May, June. So what is the cash inflow? Okay, the cash inflow, we have 2 here. The sales, number 3, and also number 9. We refer to number 3. The cash inflow is the collection from sales. So what is the information given here? Okay, the information given here, we take the example for here, sales. Okay, so sales. Okay, we take example in March. Okay, March, how much the sales is? Okay, March 2000. Okay, so the selling price is 10 ringgit. So the total sales will be RM 20,000. So this is sales in March 2000 times 10 ringgit each. Okay, how the collection of the money, is it cash purchase, cash sales or credit sales? Okay, now we refer to number 3. Normally 40% of sales are collected in the month of sales. So there is 40%, okay, times 20,000, okay, collected in the month of sales. So that means collected in March. Okay, but this 40%, there is cash discount 10% given, okay, to the customer that pay in the month of sales. So that means sales in March, okay, collect in March, so you will give discount 10%. So collection is only 90% after minus the discount 10%. So how much that you collect in March? 7,200. So this is the collection in March. Okay, so there's another balance, okay, while the remainder, so remainder, this is 100%, okay, 100%, 40% in collection in March, so the remainder is 60%, 60% times 20,000, okay, will be collected in 1 month after sale. So this is no discount, so you will collect in April is 12,000. The next month after March will be April. So this is one of the example for March sales. Okay, so we refer to working. Okay, so the working here, sales in March 20,000, sales in April, so units April sold 3,000 times 10 ringgit, so you get 30,000. In May, sales is 4,000 times 10, 40,000. Okay, June, 3,200 times 10, 32,000. So these are the sales in RM for March, April, May, and June. So in March, so from the diagram here, you will collect 7,200. Okay, 7,200. How to get 7,200 is 40% times 20,000 times 90%. Okay, so this is the working. Okay, 40% times 20,000 times 90%. So you get 7,200 will be collected in March. Okay, how much to be collected in April? So in April is the balance, another 60% times 20,000. So you get 12,000. Okay, how about April sales? Okay, April sales is 30,000. To be collected in April is 40% times 30,000 times 90% because discount 10%, so you get 10,800 to be collected in April for sales April. Okay, how much to be collected in the next month? Another 60% times 30,000. Okay, so you get 18,000. Okay, in May, 40,000 sales to be collected in May. 40% times 40,000 times 90%. So 14,400. So balance will be 60% times 40,000. You get 2,400. So June to be collected in June. 40% times 32,000 times 90%. So you get 11,520. So another 60% will be collected in July. So we do not have to record here in the working because in the cash budget, we only prepare for the second quarter, April, May, and June. So you total up the amount received from sales for April, May, June. 12 plus 10,800, you get 22,800. May 18 plus 14,400, 32,400. June 24 plus 11,520, you get 35,520. So this is the cash collection, okay, for the second quarter. Then from the working, we put it the amount received from customer based on the working. Okay, April 22,800, May 32,400, and June 35,520 from here. These are the workings that you have to show in order to get this amount. So this is the cash receipts. So another inflow will be dividend received. So dividend received from Amanah Mara Trust 8,000 in the month of June. So only June that you receive dividend 8,000. No amount received for dividend in April. No amount received in May. So you just record in June. So from the above, only these two are inflow. So you can total up the cash inflow. So you get 22,800, 32,400, and 43,520. Now we record all the cash outflows. Okay, what are the cash outflows? We refer to the first one is the purchase of material. Okay, if you refer to the purchase of material, all purchases of material are on credit with the payment made 2 months after purchase. So this purchase of material, there is only one time payment. That means 2 months after, no stages like sales. So we, in this case, we do not need to prepare the working. So we refer to here, we prepare budget for April. So in this case, we pay the raw material that we purchase in April from purchase in February. In February, you pay in April, 2 months after. Okay, the purchase of March, you pay in May. Okay, the purchase of April, you pay in June. So that's why this is unit times with 5 ringgit. Okay, refer to the answer. Okay, payment to creditors. Okay, you refer to the April, you refer to the February purchase. February purchase is 8,000 units. So one unit is 5 ringgit. So you pay in April 40,000. Okay, for May, okay, you pay for purchase in March. So March is 2,200 units times 5 ringgit, you get 11,000. Okay, for June, you pay from purchase in April. So purchase in April is 4,000 times 5 ringgit each, so 20,000. So that one will be payment to creditors. Okay, then number 4, advertising expenses and admin expenses is 5% and 10% of the monthly sales and paid in the month of sales. So in the month of sales, that means if January, you pay in January. Okay, if sales in February, in February. So we refer to April because we prepare cash budget in April. So 3,000. Okay, so 3,000 here. Okay, advertising, how many percent? Advertising is 5%, admin 10%. Okay, advertising is 5% of sales. Okay, so 5% of sales. So February sales, April sales, for 5% of February, April sales, 5% of 30,000 will be 1,500. 5% of May, 5% of May 40, you get 2,000. Okay, 5% of June 32,000, you get 1,600. Administration is 10% of sales. So sales in April is 30,000. So 10% times 30,000, 3,000. 10% times 40, you get 4,000 times percent. So from 32, you get 3,200. So finish for number 4. Okay, now we refer to number 5. Okay, production of it include in the monthly depreciation of machinery 2,000. So depreciation 2,000, okay, will be excluded because this is not cash in outflow, even though expenses no cash outflow. There is a month delay in the payments of production overhead. So in this case, if we refer to production in overhead in April, we paid in May. So March will pay in April. So we refer to March depreciation. March depreciation will be March production overhead will be 5,000. Okay, 5,000 here. Production overhead in March will be paid in April. So 5,000 minus depreciation 2,000. So the amount paid for production overhead is 3,000. Okay, so May 4,500, production overhead minus 2,000, you get 2,005. Okay, in May you pay in June. Okay, we refer to May. Production overhead is 6,000. So 6,000 minus 2,000, you get 4,000. Okay, then we refer to the next one, wages paid. Wages paid in the month incurred. So the month incurred is no problem. So April will pay in April, May in May, June in June. Okay, we have 7,100. April wages, May wages 6,000, June wages 7,000. So we just pay in the month incurred. Okay, sales tax. Okay, sales tax number 7. 5% of the total sales of a month to be paid the following month. So that means paid 1 month later. So April will pay based on what? Based on March. So 5%, okay, from March sales. So March sales will be, okay, March sales will be 20,000. So 20,000 times 5, you get 1,000. Okay, 5% times April 30 paid in May, 1,005. 5%, 40,000 May, 2,000 will pay in June. Okay, so finish for number 7. Okay, number 8. Other payments include 500 of property tax payable in May, 500 for donation in June. So property tax in May paid 500. Okay, donation paid in June 500. Okay, then finish number 8. Okay, now we refer to number 10. Okay, number 10, a new machine will be purchased in March costing 30,000. So with the payment by installment, 3 equal amounts. Okay, 3 months equal amounts. So per month is 10,000 starting April until June. So that means April, May, June. So complete 30,000. April 10,000, May 10,000, June 10,000. So total paid is 30,000. Okay, so finish. Okay, the cash outflow. Okay, finish cash outflow. Now we total up all the balances. Okay, total the outflow here for April, you will get here 65,600. Okay, May you get 37,500, and June you get 48,300. Okay, now get the net cash inflow or outflow. That means the surplus or deficit. Okay, so if in negative is deficit. Okay, 22,800 minus 65,600, you get deficit 42,800. So put in the bracket since this is deficit. Cash inflow 32,400 minus the 7,500, so deficit also. Okay, 5,100 for May. How about June? Okay, 43,520 minus 48,300, so also deficit 4,780 for June. Okay, then for balances. Okay, in opening balances for April, so that means at beginning of April, the company has amount cash balance brought down 56,200. So the net cash inflow or outflow plus the opening balances for April, you get closing balance. So this closing balance will become opening balance in May. So plus with the net cash inflow or outflow, you get the closing balance in May. So May will be opening balance in June. So you get closing balance at the end of the month of June is 3520. So this is how we prepare cash budget.